Does the rally still have legs from here? Jefferies chief market strategist and CNBC contributor David Zervos is here with his take. I guess if you mix in generative AI revolution with soft landing and now a pivot from the Fed toward cutting rates, that equals a pretty nice rally. Question is, does it continue?
It all looks really good, Sarah. And, the inflation data as well. I know people were a little disappointed in the CPI, PPI a little bit better, but let's just think about the last 2 years. In the summer of 2022, 2.25 years ago, we were peaking at 9.1% in the CPI, and we just got to 2.4. So we've come a long way. We've done an amazing job of getting that disinflation into the system after the great COVID inflation shock. And we've done that with above potential growth in almost every quarter for 9 quarters now. It's really a remarkable story. And kudos to the Fed for achieving it.
So what does the path look like from here, do you think, for the Fed and for the economy? And will they be able to continue this good news story?
I think we learned a lot in a little under 30 days about how things are going to move with the election. So, we'll be on the edge of our seats for that and just seeing whether we're going to go into a more deregulation mode for the economy with a Trump win or a continuation of what we've seen under Biden and Harris. But I think either way, the story is still reasonably positive, probably more positive for equities under Trump. But I think under Trump, we get a little bit of a stickiness on the rate side. The rate side won't come down as fast. But all in all, I think we're probably going to have to get through that part of the equation in the next month. And then we can start talking about how fast the Fed goes to something like the mid-3s in rates. And then we debate whether that's neutral or neutral is where we were back in 2019, which is what I've been talking with our clients a lot about in the last month or so.
What about what you just mentioned, what happens with the bond market, and especially what we've been seeing, the steepening in the higher yields on the long end of the curve, the deficit worries of both candidates, of what's happening already right now under this administration? At some point, does that become an issue for the equity market?
I don't think so, Sarah. I think maybe a healthy inflation risk premium or term premium, it could be good for this market. We went a long time with driving those term premiums way down. And then we got 2019, we had a pretty flat yield curve at 2%. I'd like to see a little bit of a steeper yield curve. I think that's healthier. And we had this experience with inflation. And it's a novel thing for a lot of people to see such high inflation. Now, the Fed controlled it and anchored inflation expectations, but maybe that keeps a little more balance in the curve so that we don't have this serious this expungement, really, of risk premiums that were traditionally associated with inflation up into 2019. So I think the 10-year could be a little stickier. The short end's probably where, and the belly is probably where you're going to get most of your moves here with the Fed. But again, I do think probably by and large rates are coming lower across the curve.
Hey, finally, David, more near term. A couple weeks ago, we couldn't get anyone on the show to say that the Fed might hold and then maybe skip a meeting. Now Bostic's saying it out loud. Is that a real possibility?
Carl, the thing is, if it's going to happen, it's going to happen because there's really good news. I think it's going to be that this economy is pretty strong. It might be because inflation ticks up a little bit, but again, that'll be higher nominal growth, which is usually quite supportive for equities as long as we're not losing the anchoring of long-run inflation expectations, which I really doubt. So I don't think the equity market is really going to have a problem with it. Remember, we were priced for 6 or 7 rate cuts at the beginning of this year. And we've only got a 50 so far, and we're at record highs. We don't need the rate cuts to get the equity markets to go up. That's been a big theme of ours for a long time. If there's good news and they're a little slower to get to 3.5, and then we debate the next move from there.